Many new traders are lost and confused because there are thousands of different strategies out there that's shown online, and most of them are quite difficult to understand. So I decided to do a video for my members in Callisto to give them a simple yet accurate strategy to help them find high probability setups in the market. Make sure to comment down below if you'd like to see more of these types of video, and of course, let's get started with the video.
Let's get started with the optimal entry system. Now, this thing here is meant, or I've done this zoom here to basically help you guys here, especially if you're new inside premium or you're new to trading, doesn't matter. We are here to help you ensure that you guys get the most optimal entry as possible, right? We understand sometimes the market can be very bullish, sometimes the market can be very bearish, you don't know where to enter, when to wait for a pullback, and so on and so forth. And this strategy here, or this idea of the optimal entry system, OES, is going to help you frame your understanding of the markets and allow you to use Fibonacci as one of the key confluence to be able to look for a trade. Okay, you guys are ready? Type ready inside the chat, let me know. All right, good stuff, ladies and gentlemen. Let's get right into it. All right, let's get right into it. Okay, now, first of all, how many of you guys here know actually what Fibonacci is? Type Fib in the chat. If you don't know, type I don't know. That's fine. I see a few I don't know. So that means a few of you guys here don't exactly know what it is. Very, very good. Let me go ahead and break it down for you, okay? Now, first things first, we'll be covering a few things in this Zoom. So pull out your notebooks. I want you guys here to pay extremely close attention throughout the entire Zoom. We'll be going through what a Fibonacci is, what is it used for, the settings that I personally use as well, and of course, how to use Fibonacci to make money. The most important, right? If you guys don't know how to make money with the Fibonacci, then what's the point of learning a Fibonacci, right? Okay, and of course, what are some of the other confluences to actually boost your Fibonacci level? Okay, so this is one of the things that a lot of people don't understand. You don't just learn one concept and you basically use that all the way. You need to add layers of confluence to be able to ensure your trade is high probability. And that's why I've been able to manage a 85% win rate over the entire year, right? From the start of the year all the way until now, 85-point-something% win rate, right? Over 260 or 270 trades already. Okay, so now, last but not least, we will go through a 3-step OES strategy, right? Optimal entry system strategy for you guys here. So stick all the way to the end and let's get right into it. Now, first off, what is a Fibonacci retracement? Okay, so first things first, a Fibonacci retracement tool is basically a tool that you can pull up on TradingView, which I'll show you in a short little while, right? Where there will be actually levels plotted for you already, right? Depending whether you draw it from a swing low to a swing high, or as long as you draw it from point A to point B, you will be able to see levels like this, right? 1, 0.79, 0.75, 0.618, 0.5. Now, the main idea here is that these levels are actually Fibonacci sequences, a mathematical formula kind of thing, right? These are levels that are mathematically calculated, which have the highest probability for price to come and retest into, okay? The 0.5 and the 0.618. This is the most common level that has been shown in charts. Be it whether you trade stocks, crypto, forex, doesn't matter. This key level, the 0.5 to the 0.618, is a very, very strong level that has been proven, tried and tested many different times to be an area for price to retest to. And this is why it is named the golden Fibonacci retracement level. Okay, I see a lot of what's very good. Let's get right into the next slide. Okay, so this is an example of a Fibonacci retracement here in a bullish scenario. So what you normally do is you draw your Fibonacci from a swing low to a swing high in an uptrend, which I will go through later on as well as how you should draw it. But you can see here, from the swing low all the way to the swing high before the retracement started, you can see the levels here have been respected very nicely. Price tapped into the 0.5 to the 0.618. And normally after it tests this area, price tends to provide a very strong rejection. But understand that these levels like the 0.5 and the 0.618, these are levels of support / resistance that a lot of people are using to look for potential trade ideas. Okay, so this is just one example of how it works. Okay, it has the highest probability for price to retest into. If you take a look here, I want to mention something. I personally have added even more levels for myself. Okay, you might be asking, why do you add the 0.705 and the 0.79 level. Reason being, the more I trade, the more I realize that, okay, look, price action, sometimes when it comes and it retraces more than the 0.618 level. It retraces even deeper, right? Creating a deeper level of retracement. And sometimes we don't know how to capitalize on those because price retraces so deep. Oh shit, is it going to break structure? Is it going to completely reverse and render this Fibonacci retracement tool useless? We don't know, right? So that's why these levels here I've included are used to help us identify deeper levels of retracements and potential areas of confluence to help us look for potential buys and for potential sells. Now, entering at these areas over here, let me mark it out. Okay, entering at these areas over here, just like how I've marked it out, will allow us to get tighter entries with smaller stop losses, increasing our risk to reward ratio. This will also mean that our risk of being in drawdown is also technically smaller because we are entering at a better price. Okay, so I want you guys here to take this now. For my entry areas for the Fibonacci is going to be anywhere from the 0.618 to the 0.79. This is the range that we have. These three lines over here. So for those of you guys here that don't understand how to do that and how to draw it or where to find your fib in the first place, right? Let's go to the next slide here. Okay, let's go ahead and mark out this area over here. Let's show you. Okay, I want you guys here to pull out your trading view. Pull out your trading view. Once you have pulled out your trading view, go to the left-hand side of your toolbar. You can see there's a lot of tools here, right? Don't get confused, just count from the top. Icon 1, icon 2, icon 3. Third icon from the top. You should be able to see a drop down. There's going to be a list of things. It should be the first thing that you see. Fib retracement. Okay? So once you click on it, you can just draw it anywhere from point A to point B, and you'll be able to see that your Fibonacci is different from mine. And what you should do here is double click on it, double left click on it, and you'll be able to see these settings, right? Now, the default settings is like this. This is what your Fibonacci would most probably look like. I want you to change it to these levels only. Okay, adjust it. You should only have 1, 2, 3, 4, 5, 6 levels. The 0, 0.5, 0.618, 0.705, and 0.79. And of course, 1. Okay, extremely important. I'll give you guys 30 seconds to go and take a picture of this or change it yourself right now. Shouldn't be too long. Okay, doesn't matter the order as long as you have all these 6 levels marked out. You guys already typed ready in the chat. Okay, very, very good. Let's continue with the slides, shall we? Okay, now, how do you draw your Fibonacci tool? Okay, I want to make sure that you guys here understand. In the markets, there are normally 3 types of markets, right? We have the bullish market, we have the ranging market, and we have the bearish market. Now, Fibonacci retracement tools work better in a bullish or bearish market, trending markets basically. You don't want to be using them in a range because when you use them in a range, more than likely, price will tend to break out of the Fibonacci zone that you've drawn anyways because price is going up and down, it's playing ping pong. So for a bearish market or in a downtrend, you will normally see what? Higher highs, higher lows, right? And when you see lower highs and lower lows, let's see over here, you can see lower highs, lower lows, lower highs, lower lows. Now, each time you identify a lower high and lower low, and a brand new low low has formed, and you start to see a retracement, what you want to do is mark it out from the swing high to the swing low. Okay, now you may be asking, Nick, do you want to draw it from the body candle close itself, or do you want to draw it from the wick? Personally, for me, I draw it using the wick. Some people draw it using the bodies. But for this strategy, I use the wick myself. Wick to wick. So from the top wick to the bottom wick of the entire move lower. Okay, now you may also ask, how do you know when this low here, where the swing low ends and price isn't just going to continue dumping and dumping and dumping and dumping? How do you know that? Okay, pay close attention. When you see price start to retrace to close to the 50% level and it's about to touch it or close to the area already, you can start to mark out this level because this shows us that price is starting to actually provide a proper retracement, not just like a dump, come up, dump, come up, dump. This to me isn't a retracement. This is just like a drop-based drop kind of thing. You know, when you see proper retracement, you want to see price come close to the 0.5 level. So yes, Suhail mentioned something interesting. Wick is the best, it shows liquidity exactly, and that's why you want to mark out the wick to the wick. Okay, so this is for a downtrend. Now in an uptrend, you want to draw it from the swing low to the swing high. Same thing, draw from the bottom wick to the top wick. And once you do see price start to give us some form of a retracement closer towards the 0.5 level, that's when you can start to draw your Fibonacci from the swing low to the swing high in an uptrend. Very, very important. Can everybody here understand this? Type yes in the chat. Okay, I know some of you guys here have questions on the time frame. I'll go through that later. Alright? Very, very good. It seems like everyone here says yes. Solid stuff. Then let's get right into the very next slide. Now you can see here, to identify a swing high and low, just now I mentioned, right, downtrends, you will be able to find swing low, swing high, right? But if you're brand new, it's going to be quite tough for you to understand where a swing high and swing low is. So let me break it down for you here. You can see here, in this chart here, we actually have identified a key level of a swing high. Now, why is this a swing high? Think of a swing high as the sharpest point in price formed before completely reversing in the opposite direction. So in this case here, price created a very sharp move towards the upside, like that, and then dumped massively. Okay, and I want to bring your attention to these minor retracements here. These minor retracements here. These minor retracements here. Here. And here. Why did I not draw my fib to this low? Why did I not draw my fib to this low? This low or this low? Okay, listen up very carefully. Actually, when price starts to break below this level here, you can see as price moved up, it starts to break structure towards the downside, right? Break past the most recent higher low, forming a lower low, creating a bearish trend. What can we see? I can draw my fib from this high to this low. As it's starting to retrace, I can see how far is the retracement. Is it very close to the 0.5? Or is it not? Is it just a smaller retracement? If it's a smaller retracement and it continues dumping, I extend the fib from here to here. The swing high is still here. And once again, price retraces a little bit, not even close to the 0.5, dumps again. I extend my fib here. Extend, until you see price start to really come close to the 0.5 level here. That's when you know, okay, cool, there's a high chance we could see these levels here that I've marked out, the 0.618 to the 0.79 be tapped. Alright, now can everybody understand how I draw the Fibonacci now from a swing high to a swing low? If you can, type 1 in the chat. Okay, extremely important, yeah? So same thing for the bullish market here. You can see that there is going to be a swing low all the way to the swing high. You can see it. Cool. Let me draw the swing low to the swing high here. Now, why did I not draw it here? Because number one, price action didn't even break structure. Price did not even create a bullish leg. This was more of like a retracement. If let's say price never broke past this high, we wouldn't have a swing low, swing high. Because price is creating a swing high to swing low. Would that make sense? Does this make sense or not? For you to be able to identify a swing high movement, you need to first break structure. You need to break structure towards the left, okay? So, now, what you want to take note of here is the same thing. Once you start to see a retracement close to the 0.5 level, as seen over here, that's when you can start to really plot this level here. Plot this fib from the swing low to the swing high. And as you can see, these levels here from the 0.618 to the 0.79 created a very nice rejection of this scope, of this zone. Each individual level, like here, like the 0.618 over here. Let me just draw this again, so that you guys are extremely clear. These key levels here, clean box, you can see. Price rejected off the 0.75 very, very nicely with a wick candle closure. Right? Not that it matters, but this shows us a sign of rejection. And therefore, price continued going higher. Using these key areas, these three levels that I've marked out, as my area of support. This is why Fibonacci's are so powerful, especially in a trending market. Okay, let's move on to the next chart. What are some confluence that actually works together with a Fibonacci level? Normally, if you guys may think that, okay, you know what, Fibonacci levels are cool, right? I can use to take retracements and take potential pullbacks to enter a potential re-entry trade. Okay, but I want to warn you that you shouldn't use them without other confluences. A lot of new traders think that, look, okay, I found this super nice concept, super nice tool that I can use for trading. And I'm just going to throw away every other thing that I've learned in trading just to use this for one concept. That's not how it should be done. You should realistically use them in conjunction with each other to give you as many layers of confluence as possible. That's how I've been able to consistently give you 85% win rate trades inside Premium, giving you analysis every single day because I use multiple different concepts and Fibonacci retracement is just one of them. So make sure to always look for additional confluence. Now, what are some of the confluences here that we can use? Support resistance levels, order blocks, fair value gaps. Now, I'll go into more examples later on. All right, but if you take a look in this specific picture on the right now, you can see price action has actually given us, you can see price action here. Let me bring out my pen. Okay, there we go. You can see price action on the left created a support. Rejection 1, 2, 3, 4. And what did price do? Price broke through it. And chat, let me know, what happens when a support breaks? What forms? Resistance. Very, very good. So now when you form a resistance and you take a look at what price done over here, you created a swing high and created a brand new low, breaking past this structural level. So this is where I can identify my swing high and swing low. Right, and as price starts to continue to retrace close to the 0.5 level, this Fibonacci retracement level becomes valid. And what did price do right after? Price rejected off the support as seen over here, which is in line, coincidentally, right, with our 0.618, 0.705, and 0.79 level. It coincides with these levels here. Okay, and on top of that, if you are attentive and you see what is happening on the charts, price created a buy to sell, which is where price artificially pushes upwards to manipulate price action before pushing lower as its intended direction, creating a bearish order block. I explained this many different times on stream already. Order block. And just coincidentally, this order block coincides with the 0.79 level. So as you can see here, this specific example here had two confluences. Now, all you need is at least one. At least one. Okay, I'll give you some examples here. Okay? So, very important. Now, if you take a look here, you can see price action created a move lower. Now, some of you guys here may ask, okay, look, if price doesn't create a body candle close, isn't it riskier? Answer? Yes. But take a look lah. This is going to be a little bit more advanced if you want to talk about wicks here, right? The idea here is if price action broke past this level here with a body candle close, the direction is already bearish. And price just created a lower low, creating a BOS. This becomes a high probability trade setup, regardless whether it's a wick or not. Alright? So right now, this is just one example. Let's go through a few more examples here. Here, gold on the 4-hour chart. You can see price action, we have created a swing low, as seen over here, swing low, created a swing high. Price started to retrace very aggressively. And when did price come into? An area of support. Rejection 1, 2, 3. Retested the 0.618 level here and pushed up higher, breaking this structure once again. Can everybody here understand this? How support is used in line and in conjunction with the bullish Fibonacci retracement here. From the swing low to the swing high, marking out the wicks. Extremely clear? If you have questions right now, ask now, because I'll be going through two more examples of how you can use confluence together with an order block and with a fair value gap. Is that not resistance? Yes, it is. It's a support that failed, it's a resistance that failed that turned into support. That's why I labeled it as a support, because this is where we are going to be looking for potential buys. Does that make sense? Okay, very straightforward here. No worries. Examples will be shown later on. Okay, examples will be shown later on. Okay, we want to make sure that you guys can understand the theory first. Alright? This is one example of how you can use the bullish Fib from the low to the high, and then a retracement into a support level or a resistance level that failed that became a support, giving us further confirmation to go higher. Next example here. This one. A different confluence. Same thing. We have a swing low to the swing high. Now you may be asking, why Nick? Why did you not draw a swing high here? because price never retraced into the 0.5 level. From here to here, the 0.5 level is here. We never came close to it. So I drew it from here all the way to here, where price came into the 0.5 level and came further into the 0.618, the 0.705 level, as well as the 0.79 level. Now, as you can see, let's take a look at these three boxes here. Okay, I'm going to mark it out. We see box 1, box 2, box 3. Within these boxes, can you identify a fair value gap? Yes or no? Where is a fair value gap? A 3 candlestick pattern, right? Candle 1, candle 2, candle 3. We have a fair value gap. Let me change the color. From this high to this low. This is where it aligns with our OES zone. Okay, the 0.618 to the 0.79. So what did price do? Tap, continue going bullish. Okay, so this is very, very good when it comes to looking for an area to stack confluence from. Okay, now let's take a look at the next example here. You can see price action here has created a move towards the upside from the swing low all the way to the swing high. Now, price came from here, down here, all the way up to the swing high, resulting in what? A bullish momentum, a bullish shift towards the upside, breaking past this structural high. Once again, I draw the fib from the low to the high, marking out the wicks. Price starts to come down into the 0.5 level. Great, awesome. So now I know I can pay close attention to this level here, right? And as you can see, within this level here, within these three lines here that we have been plotted out by our Fibonacci retracement, we can see price actually tapped into a order block here, which hasn't been tested. Price tapped it once, bam, move. Created a break past this high, eventually, slowly but surely on the 50-minute time frame. So these are examples as to how you can use your order blocks, your fair value gaps, your support or resistance levels to give you confluence to take a trade in conjunction with your Fibonacci retracement levels using the 0.618 to the 0.79 level. Do we still need to have a change of character when retesting? Okay, this I'll go through later on using the system itself, okay? We'll be using the OES system and I'll be explaining the strategy for that and give you two different types of entry models. Okay, you guys are ready in the chat and let's get right into it already. Patience. I know you guys, your brain move very fast one. I want to skip steps one. Chillax. Go through the basic fundamental first, then we go through the details later on. Alright? SMC harder, this is all simple. Exactly, this is a simpler version of it. Right? A simpler version to help you spot entries at optimal areas. Not looking to enter at the high or enter at the low. Okay, now let's get right into it already. OES strategy. Okay, optimal entry system. First step here. All you gotta do is identify your directional bias. Take this down, You want to identify your directional bias. Now, what is directional bias? Those of you here that are new, basically, where is your market heading? Or where is the market heading? Going up or going down? Or is it going to range? You must understand where the market is trending. Like I mentioned, the Fibonacci strategy here is going to be best used in a trending market, as I mentioned earlier on. So there are usually three types. The bullish, where you create the higher highs and higher lows, like this. Okay, you're gonna see higher highs and higher lows like this, right? Creating higher highs and higher lows. Or the ranging, where you do have a range like that. And then you have a support, resistance. Oh, forgive my drawing, man. But yes, this is where you have a very strong resistance, very strong support, where you are basically in the range, you're not breaking up, breaking down. Okay, if you do see this kind of price action, I want you to sit out from using this strategy. Sit out. You do not want to be trading in a ranging market with this strategy because this only works or is a lot better in a trending market. Okay, now the third scenario here is going to be bearish, where you're going to have lows, highs, lower lows, lower highs, lower lows. Again, forming bearish structure. So very, very simple. I think this one, everyone should be clear. Number one, identify your directional bias. Okay, this can be on the daily, can be on the 4 hour, can be on the 1 hour, whatever. Whichever time frame you want to trade on. Like I mentioned, this strategy here can be used on any time frame. Okay, Of course, the higher time frame you go, the less setups you will see because it takes longer to form. On the lower time frame, there is going to be a lot more setups because the market moves very fast on the lower time frame. So now, let's take a look at the step number 2. OES step 2. Plot your Fib retracement. Okay, I must repeat this again. In a downtrend, you want to draw from your swing high to the swing low using wicks. Okay, you want to draw it from wick to wick. Very important. Wick to wick. Okay? Draw it from the swing high to the swing low. And once price starts to retrace, you can start to pay close attention to these 3 levels. The 0.618 to the 0.79. Okay, same thing for the bullish scenario. You want to be able to mark out your swing low to the swing high and wait for a decent size retracement. Anywhere close to the 0.5 level, you can consider this a bullish leg up already. And you can start to draw your Fib from the swing low. And then, once again, you mark out or you pay close attention to the key levels over here. Okay? Now, best case scenario here is at the same time, what you want to be able to do is wait for price to come into this area, which is step number 3. Okay, step number 3. Let me clear this. There we go. I drew it out for you already. You want to wait for price to come back into this area here. Okay, come back into this area here. Tap into these boxes where you have marked out your 3 levels from the 0.618 to the 0.79. Okay, once it taps into this area, you might be asking, Nick, do I enter at the 0.618, 0.705 or 0.79? I'll get to that very, very soon. Okay, but what you want to do here is before you even look to enter, you need to identify what are the areas of confluence that you actually have in alignment with this box here. You need to understand that you need, number 1, have either a resistance level within this area, a bearish fair value gap, or a bearish order block. Just like the examples I've shown you earlier on. Okay, because these will be your confluence to help you take potential sells with higher probability. Because your Fib level, your OES, your 0.618 to the 0.79 level is confluence number 1. Confluence number 2, your bearish order block, your bearish fair value gap, and your resistance level. Okay, can everybody here understand this type 1 side chat? Let me know. Very, very good. So similarly for the bullish scenario here, you want to be looking for price to create a swing low and then a swing high in an uptrend. Okay, again, use the wicks. Use the wicks. Bottom wick, top wick. Once you see retracements start to form close to the 0.5 level, great. You can start to watch for your key areas here. The 0.618 to the 0.79 level. This is where your OES retracement level is. Okay? And what you want to do here, same thing. Find for confluence. What can your confluence be for a bullish market? You're going to be looking for a bullish order block, a bullish fair value gap, and or a support level. These 3 areas, these 3 things are things that you can look for to capitalize on a higher probability trade in a trending market. Okay, extremely important. Okay, so now that you guys here understand this, let's move on to the most important part that everyone is dying to know about, right? What are the entry types? Okay, there are 2 types. First type is where you're going to have the risky entry model. Okay, the risky entry model here is where you're going to enter at the 0.618. Now, why did I pick the 0.618 level here? Why did I pick this very interesting level? Why not the 0.75? Why not the 0.79? Right, why not the 0.705? Why not the 0.79? Because the 0.618 level is now the overlap between the golden Fibonacci level, which is the 0.5 and the 0.618, and the 0.618 to the 0.619. So it is the most overlap or tested area in a Fib, and that's why I'm looking to enter a limit order at the 0.618 retracement level with stop loss above the swing high or swing low. In this case here, it's going to be the swing high because you're going down. This is the riskier one. Now, the reason why I don't want to put it here as well, or put it here as well, then you will have to suffer the effects of, oh shit, what if, or hey shit, price nearly hit the 0.75, but it rejected off the 0.8, the 0.618, and it continued dumping. You don't want that to happen, right? So, like I mentioned, for a riskier entry, you can just set your limit orders at the 0.618 level with stop loss above the swing high or low. Target A1:2. Now, why do we target A1:2 risk-reward ratio? Okay, you must understand, in a trending market, price is going to continue trending upwards and upwards and upwards, but each time it creates a higher high or a lower low, price will more than likely retrace. Now, when price retraces, you do not want to be stopped out, do you? You do not want to be suddenly giving back your profits to the market, do you? So what you want to do here is get in and out fast, and entering at the 0.618 level allows you to get a 1:2 risk-reward ratio, as seen over here, right? This is a 1:2 risk-reward ratio, just right under the previous low. So it doesn't need to overextend too much, right, to hit your full TP. Okay, so that's why I have set a 1:2 as my full take profit. Okay, risk management wise, I'll go through in a short while, but very important to take note that that's why we target a 1:2. Now, this is for the riskier entry. Very simple one, pretty brain dead, right? You just look at the trend, you see a swing high and a swing low in a downtrend, good. You mark it out, you wait for your retracement, okay, good. It's coming towards the 0.5. Let's mark out this level here, okay? And then you see, okay, good. Is there a bearish order block? Is there a bearish fair value gap? Or is there a resistance level in line with these three levels here that I've marked out? If have, great, I can set a limit. Okay, this is for risky entry. Because you are not waiting for no change of character, no market structure shift, no nothing. You're just looking at that and plotting your levels, which has been working out quite well on very trending markets. Something to take note of. Now, if can everybody understand this type risky in the chat, let me know. Very, very good, huh? So you understand this. Now, for the safer entry model, what you're going to be looking here is you are going to be looking for this. Okay, let me just clear this so that you guys don't get confused. What you want to be looking for here is for price to tap into. Okay, okay, first thing first, let me rewind everything again. So step 1, you identify your market direction. Step 2, you identify your swing high, swing low, draw your fib. Step 3, wait for price to retest and look for confluence within these three areas. So same thing here, you want to see a bearish order block, a bearish fair value gap, or a resistance level to be in line with this level. Now, once price taps into this area, you want to drop down to the lower time frame to look for a change of character. Okay, so now this safer entry is a bit more complex. You need to use time frame alignment, and you also need to use the idea of a change of character, right? A little bit of SMC in it. Okay, I'll be explaining in a little bit what these means, okay? Like what a change of character means and what time frame alignment is. Okay? Now, is everybody okay to move on? If you're okay, type okay. Any questions here? Same thing, target at 1:2. Perfect. Very, very good. Now, let's move on. You can see, for the confirmation entry model, which is this one here, follow the steps very carefully, like I mentioned. If you need to take a picture of this, take a screenshot right now. Okay, step 1, you want to wait for price to tap into the OES. Okay, once tapped, good. Drop down to your lower time frame, okay, which I'll go through in a short little while. And step 3, look for a change of character in line with your directional bias. So as you can see here in this drawing, I've marked out, chat, is this a bullish or a bearish change of character? Let me know. Bearish, right? Good, exactly. So what you want to do here is enter off the creation of the change of character. The moment it starts to break below, you enter a sell with stop loss above the swing high, target lower prices. Because this is giving us confirmation that your lower time frame is now in line with your higher time frame. Okay? Very, very straightforward. Okay, so now let's go through time frame alignment. Now, you guys like to ask, right? How can I use this strategy? What time frame? What time frame? This is the guideline I have for you. If you're looking to trade the daily, right, and you want to use the safe entry, then you have to drop to the 1 hour time frame for confirmations. If you're using the 4 hour to analyze your trend, and you want to have a safer entry, you need to drop to the 15-minute time frame for confirmations. So these are the time frames you need to look for when it comes to looking for a change of character. Okay, the change of character must happen on the 1 hour time frame for a daily Fibonacci retracement. 4 hour, 15. 1 hour, 5. 15 minute, 1. This one here, the last one here, is really for scalpers. If you want a very safe entry using the 50-minute retracement, Fibonacci retracement, trending market in the, for example, it's creating higher highs and higher lows on the 50-minute, and you're looking for a safer entry, 1 minute retracement is where you get it. Okay, so like I mentioned, this is mainly for scalpers. If you're an intraday trader, use this, use this. If you're a swing trader, use this. Else, use this for scalping. Okay, very, very good. Very, very good. Now, let's go through the last few slides here before we go into some live examples, okay? In scalping, you may need to exist in 1 minute. Yes, correct. Correct. Unfortunately so. That's how scalping is. Alright, so now, let's go through change of character, especially for those of you guys here that have just joined Premium and you're new, you don't understand what it is completely. Right, let me simplify it for you. Right, a change of character indicates a potential trend reversal. That's it. If let's say you're in a bullish market, for example, in this specific case here, you have a bullish market, price creates higher highs, higher lows, higher highs, higher lows, higher highs. Now, when a trend breaks, or when a trend fails to hold, it needs to create a break of the most recent higher low. And in this case here, it's going to be this level here. Because when you break the most recent higher low, what actually forms? A lower low. Because this low is lower than this low. Therefore, it's named as lower low. Now, if I'm looking to be continuing the bearish trend, check, do I need to create a lower high? Yes or no? Answer is yes. I see someone said no. You need to create a lower high in order to continue the bearish trend. Because in the end of the day, no one price action is going to go down like this all the way. It's always going to do this. Very important. So we will create a lower high. But at the end of the day, the most important thing here to understand is that once you do see a break of a higher low in an uptrend, the first time it does this is where you have a change of character. If it starts to break again, then this is called a BOS, because a BOS or a break of structure is used in terms of continuation of a trend. So in this case here, price is continuing the bearish trend, and that's why it's labeled as BOS. In this case here, price is labeling it as the BOS because price is continuing to break highs. Right? This high here wasn't broken. And then the low was broken. Therefore, this is the change of character level. Alright? Very, very important here. So likewise, for the bearish scenario, you created low, high, lower low, lower high, lower low. We finally have a break of the lower high. And what does it create? Higher high, right? It creates a higher high. And this results in a bullish change of character. Okay? So this is exactly where your structure comes in, and this is what we use for confirmation. You want to use a change of character to align your lower time frame with your higher time frame directional bias, which is where is your daily, your 4 hour, your 1 hour looking to go on the higher time frame. Okay, can everybody here understand this? If you understand this, type yes in the chat, let me know before I move on. Remember, you should be taking down notes. Very, very good. Okay, now let's move on to the last part here. Okay, I'll go back to the time frame slide later on. No worries after I go through everything. Okay, now, this is the most important part. Risk management. Right, you enter a trade already, how? Very simple. Once you hit a 1:1 risk-reward ratio. So for example, let's say your distance from your entry to your stop loss is about 50 pips. Let's say it's 50 pips. What you want to do is target 1:2 risk-reward ratio, right, for your full take profit. A 1:2 maybe all the way down here. Thereabouts, maybe. Right? Once price hits 1:1, that means it drops down 50 pips. 50 pips SL. 50 pips. Oops. 50 pips. Hit here. Set your partials to break even. Okay, sorry. Set your partials to break even. Okay, repeat. Set your SL to break even and take partials. Okay, you want to ensure you go risk-free. Just in case price decides to do this. Comes down, doesn't break below its own low and continue higher. This is how you should risk manage. Okay, one more time. Once it hit a 1:1 risk-reward ratio, take partials, set SL to BE. Those of you guys here that don't know what SL to BE means, it means set your stop loss to your break-even price where you entered. Okay, take partials. How much partials? You want to take 50%? Go ahead. You want to take 25%? Go ahead. It's up to you. Personally, I take 25%. I let the rest of the 75% hit to full TP. I personally take 25%. I know that there's a high chance price will continue lower and smash my full TP anyways. Because a 1:2 RR is not a very far target. 0.01 cannot take partials. So you need to have more than 0.01 on your lot size for the trade, for you to take partials. That's why we recommend you to trade with $700 or more. Okay, so this is how you do it here. So same thing for this area here. Once you enter at the change of character for the safer entry, right? You enter the change of character, stop loss above the high. Your take profit should be a little bit further down because I assume that your stop loss will be a little bit larger, right? To give it a bit more room to breathe as well. After you waited for a lower time frame confirmation to take a sell. But same exact thing, same story again. No matter how big your stop loss is, right? 1:1 risk-reward ratio. Once you hit that, take partials SL to BE. Will you upload on YouTube like last time? Yes, I will. But shouldn't we set BE at 20 pips no matter what? Okay, you want, you can. That's how I normally do it. Regardless, I set SL to BE at 20 pips. That's my rule of thumb. But if you're just looking to follow this strategy solely, 100%, and you use proper risk management, then yes, this risk management style is also okay. Clear? Very clear. Okay, very good. We are done with the slides. Now let's hop onto some live examples. Okay, let's go ahead and take a look at the live examples here, ladies and gentlemen. Now, I want you guys here to pay close attention, alright? Pay extremely close attention. Now, I've marked out quite a few examples here and I want to go through every single one of them with you. Let's start from the very first part. Right, the very first example I have marked out here. Now, I want you to take a look at this. Check. What do you see here? Price created a break past this high. Body candle close, right? So we have broken structure. Can we now say that we are somewhat bullish? Yes. So because now we are somewhat bullish, I can definitely look to draw a fib from the swing low to the swing high using the wicks as well. Now, as you can see here, the very next candle provided a very nice retracement. Okay, and at this retracement itself, if you look towards the left, what are the confluence that we have that can stack with a potential buy here? I see some of you guys here saying already. Very good. You have a bearish OB. Oops, bearish OB. Exactly. And this bearish OB is in line with basically almost all three levels here. The 0.618 is just barely above it. Okay, so now if you wanted to take a riskier entry, what you could have done is taken a trade like this. Okay, put your entry at the 0.618, stop loss below the OB, which is the swing low. Target a 1:2 RR, or 1:2 flat. Okay, thereabouts, okay? A 1:2 RR. And as you can see, if you entered a riskier entry here, let's take a look. Would price have ever come back to break even? Answer, no. So yes, the riskier entry works. Now, let's say if you want to look at the safer entry. God, control. Let's take a look at the 5-minute time frame. Price action here, once price started to come back in, we need to look for a change of character, right? Oh yo, this is a bit ugly. Let me just remove this here. Okay. Now, assuming that we are looking for a change of character, right? This is where the change of character is. And like I mentioned, what was the strategy? The moment you see the creation of a change of character, you enter a position. Yes or no? I see a lot of say yes. Okay, I mentioned that you should wait for a retest. And here we got the retest. So your entry shouldn't be here. This area here. Okay, I zoom in again. The retest. Enter at the retest. In an ideal situation and engulfing also, correct. But in this case here, no engulfing But this is good enough already. Remember, you're already asking a lot out of price. You even went down to the 5-minute for a confirmation. So at this point here, you enter once price broke past the change of character, retested the level, and the stop loss below the swing low, as per usual. As you can see, the difference in entry Just now was 70 pips SL. This is a 72.4 pip SL. 2 pip SL, to me, not much difference, but it's worth the confirmation. Right? It's worth the confirmation. It makes sense. Given that the entry criteria, given that I'm asking for a lot more extra pips, or a lot more extra confirmation, it's a 2 pip difference. Sure, I'll pay for that. Alright? So this is where the change of character happened. Sticking solely to the strategy. Look, I don't want you guys here to confuse this with the current strategy that I'm using to trade on a daily basis on the London and New York session. My strategy is my strategy. This is a strategy used to help for beginners. Very, very simple to execute. Not a lot of nuances in the markets. It's pretty plug and play. So, do you have to wait for a candle to close bullish on the retest? Or nah, don't need. The moment you retest, can enter already. How to draw the SLTP box? Oh, okay, I guess you're new. Right, no problem. Right, go to your left-hand side corner, right, of your trading view. You should be able to see that there is actually a forecasting measures tools here, right? Icon 1, 2, 3, 4, 5. The 5th icon from the top. Click on this small little arrow here. You should be able to see your long and short position. So where you want to enter, I do see some of you guys here a bit confused where to enter, right? You enter on the 3rd bearish candle that tapped into the change of character. Can enter already. Can everybody here understand this type one side chat? I don't want to hold you guys up for too long, so I want to go through a few more examples before I end it off here. Very, very good. Now let's get right to it already. Okay, so this trade, of course, both trade scenarios here, where regardless whether you use the 0.618 or the confirmation entry, you both hit full TP in the end of the day, right? And 1:1, like I mentioned, 1:1, partials taken, SL to BE. At this point only, you SL to BE. But if you want to 20 pips SL to BE, also can lah, also can, okay? That's also safer if you want to do that, to increase your win rate even further. But the idea here is that 1:1, you SL to BE. Okay, now let's hop on to the next example right now. Okay, let's not waste any more time here. Okay, let's remove this. Let's go. Okay, first example done. Next example here. Ladies and gentlemen, take a look. Right here, we have a very, very bearish break towards the downside. Now, chat, I ask you, right now, price action has created structure like this. Price came down, came up, came down, came up, came down, came up, okay, and then came down, pushed up, and then we finally broke below this low here. Chat, what is this called? Very good, change of character, right? Your Chokchi. Price creates a change of character here, like this. Once price creates the change of character, tells us potential reversal on the 1 hour. Right? Since we are analyzing this on the 1 hour, our confirmation time frame is what? Chat, let me know. What time frame is it? I see some 5, some 15. 1 hour is 5 minutes. Okay, I'll show you the table one more time before I end of the Zoom later on. Okay, 1 hour trend, 5 minute confirmation. So now that we are very, very sure we are creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Assuming we're going to continue the bearish trend, ladies and gentlemen, and price started to retrace into at least the 0.5 level or close to it already, we can start to mark out this area over here. Let me mark it out with a box. Okay, this area over here. Mark out this area. Okay, so like I mentioned, risky entry, very simple, same thing. Once price taps into this area, target A1:2. And in this case here, price action does what? It fulfills a 1:1, as seen over here, before coming back to break even, and then stops you out at break even. See, you're entering during the Asian session. Ladies and gentlemen, you hit TP before the news candle came out. Jabir, you understand? You enter during the Asian, you go out even before the news session came out. So very simple, it doesn't matter, especially if you're trading on the high time frame, the strategy works. Oh, you're talking about the first candle here? To me, this is okay. And most importantly, right, this also wasn't really a news candle like a NFP or CPI, right? Because first of all, on the 8th of July, we have already passed our CPI, our NFP, because NFP happens on the first Friday of, so we passed that already, right? And CPI happened on Thursday. So yes, this is not a very important news candle, but this was because of the fact that there was volume during the New York session. You can't assume every large candle is a news candle. Yesterday, we had a 200, 300 pip dump and there wasn't even news. Okay, so you need to understand that. Okay, so yes, this example here, we actually managed to capture a 1:1 RR, partials taken, SL to break even. Okay, now, if you wanted to take a a safer entry on the 5-minute time frame, which is our confirmation, right? Where could you have entered? Let's take a look. Okay, so this is the 5-minute time frame. You can see price tap into the 0.618 level. Great. All we're looking for is a change of character. Okay, so sorry, I should have marked out this line. This line is a wrong line here. What you should have done here is wait for price action to create a 5-minute change of character. Now, where would a 5-minute change of character be? Here. Right, price creates a change of character at this level here. So the moment you see a body candle close, retest, great. You can look for potential sells. Okay, enter here. Stop loss, once again, above this high. Now this is gold lah, huh? If you want to have such a large stop loss, this is something that you can use. Target a 1:1. And in this case here, you wouldn't have been able to capture a 1:1. But given how volatile stop loss is, even I wouldn't put a 165 pips stop loss. And given that our entry is below the 0.5 level, I want to ensure that number one, my risk is sound. If this level here breaks, and I take huge losses here, doesn't make sense to me. So how you could adjust your stop loss, at this case, is adjust it to the swing high that tapped into the 0.618 level for a 60 pip stop loss instead. And this allows you to capitalize on at least a 1:1 RR. As seen over here. A 1:1. Done. Same thing. Change of character found. Executed. Smashed it. Hi Nick, for gold, do we need to use split positions for further risk management with this? Oh yes, you actually can. And how can you actually do that? Have one position at the 0.618, another position at the 0.705, the last position at the 0.79. You can do that. You can split your risk and then your full SL all the way up here. Confluence was what? OB? Confluence here. In this case, on the 1 hour, very good question. Let me show you. Where is it? Bam. Okay, so over here what you have is a 1 hour OB. Buy to sell. And at the same time, we also have a huge fair value gap. We have a huge fair value gap. So this is double confluence already. If you want to use support resistance also can. I can even draw this. This area here, rejection, right? Look, but honestly, this resistances slash rejection area, right? A bit BS lah. The main point that you should be looking at, right, is actually this buy to sell that created this bearish OB. Double confluence and change of character only 1:1 ratio. Like I mentioned, this is a very simple strategy. If you want to inculcate my knowledge of SMC, I can make the RR a lot better. You think about it this way. The gold trade on Tuesday ran 350 pips. Chat. I ask you, is that a 1:1 or a 1:3, 1:4, 1:5? You let me know. You know what I mean, right? So it takes knowledge, it takes experience to be able to catch such moves like that. But this is just one of the way you can add confluence into your trading. Don't care whether you use the OES strategy or not. You can use Fibonacci as a way to give you additional confluence. Can I go through one more example and I call it a night. Alright, ladies and gentlemen, let's go through one more example here. So, on the 4-hour time frame, okay, you can see this specific example here. Price action, very clearly, very bullish, creating a high, creating a low, creating a high, created a brand new low. But within this price action itself, you can see there was a change of character. Now, why is this a change of character? Price came up, came down, came up, came down, created a brand new low. Price broke past this brand new low with a body candle close. So chat, is this a strong change of character or a weak change of character? Let me know. Very strong. Exactly. So what I can do is mark out my swing low, swing high. As price comes into this area here, right, very close to the 0.5, I can start to focus on these main levels here. The 0.618, all the way to the 0.79. Our OES levels. And as you can see here, what is overlapping with this area? You can't really tell because the 4-hour time frame. If you do see a scenario like this, you can't really tell. What you can do is either number one, zoom out a little bit more. Look at this huge one 4-hour candle itself. This 4-hour candle itself is a OB. So you are looking at a level within a bullish order block. Okay, but if you don't want to do that, you can drop down to the 1-hour time frame, just to be extra sure. And there you have it. You have a 1-hour, bam. Right? The sell to buy. That broke structure here, here, and here. Okay, so this is where the OB is. Price taps into it. What does price do? Continue to create a change of character. Okay, now, since the original time frame where we found this trade was on the 4-hour, let's dive down to what time frame to look for our safe entry. Now we know for sure that the risky entry already smashed full TP. That we know for sure because of how bullish this is. I don't even have to go through it. Okay, 15 minutes. Let's find for the 15-minute entries, ladies and gentlemen. Okay, let's see. Okay, so for us to create a 15-minute change of character, I ask you, where do you need to break? This level here? Yes or no? Yes, right? Very, very good. So once we have a break above this level, great. I can look for a potential entry. Long. Bam. Stop loss. I can put below the swing low if I really want to swing this and just use proper risk management. I'm okay with 227 pip stop loss. If that's what you want to do. Because that's what swing traders do, right? A lot of you guys here like to swing, right? And since you like to swing, you must be okay with a 227 pip stop loss. But if you're not okay with that, you have to reduce it to this level. 120. If you're still not comfortable, reduce it into the most recent 5-minute or 15-minute order block that hasn't been tested, this sell to buy. And yes, you're right, we are waiting for the retest. We don't enter on the breakout. We wait for the retest, enter here. And at the same time, as you can see, with proper refining of stop loss, you can have a 60 pip stop loss still and still target a 1:2 smash full take profit. Alright? Can you show us also a trade that was failed and analysis why it failed even though he used a strategy? For sure. Let me show you the most recent example here actually on gold. Right? This example here on gold was actually formed today on the 4-hour time frame. Price created a low, started to retrace 0.57 level. The reason why I look for a bearish Fibonacci retracement is because we have created a 4-hour change of character with a body candle close. Once we created this, what happened? Price started to retrace. Test into where? Ladies and gentlemen, here we have ourselves a very, very nice 4-hour bearish order block. Oh, you. So this is our confluence. Let's say I take a sell at this level here, safe entry, stop loss above the high. I target a 1:2. Would price have hit my entry yet? No, price is still fucking around. Would this trade hit my 1:1 or hit already? Oh, oops, hit already. So I guess, look, it's very hard for me to show you an example that fails unless it completely reverses. Okay, now if you want to see one very good example of maybe price action starting to fail, right? Even if let me give you one example here. You can see price creating high, low, bearish. Yes, no. Chat. Are we bearish or not? Bearish. Correct, right? Yes. So, what do? I draw my fib from the high to the low. I draw my fib from the high to the low. Now I ask you, our key zone here, we have a bearish order block. Same thing. Same exact thing. Confluence. Bearish order block. Enter. Risky sells. Stop loss above the high. Target at 1:2. Do we hit full TP? No, we don't. But with our risk management strategy, we don't lose because we hit at least a 1:1. So I don't care, no matter how you spin it, there's always a way to take partials out of this. Yeah, you partials plus S to B, there's no way you will lose. I don't care, even if I get the direction wrong, I'm still 1:1 RR. That's why this OES system is so good as long as you are able to find confluence with your key Fibonacci levels, like the 0.618, 0.075, 0.79. These 3 levels are the areas that you should be looking at. Okay, so I hope you guys here have learned a whole bunch. You guys have learned a whole bunch. Type W in the chat, let me know. And yes, that concludes the live stream. I wouldn't say the live stream, but the recording for you guys here, or for everyone here in Premium. right? I hope I've answered a lot of your questions. And let me go ahead and show you the time frame once more so that you guys can go and take a look. This is the time frame that you will be using for this strategy, right? Feel free to watch the video as much as you can. And if not, I will see you guys on the live streams once again tomorrow. And if you want to use this strategy, definitely use it. Practice it as much as you can. This strategy is extremely simple for beginners, right? It's one of the first things that you can do to start becoming profitable already, right? Just by implementing this strategy, right? Sorry guys for holding up for about 1 hour and 13 minutes, but I hope it was very valuable and insightful for you guys. So with that being said, I hope you guys enjoyed this stream, and I'll see you guys in the next one. Ciao skis.